This episode is brought to you by Indeed. We're driven by the search for better, but when it comes to hiring, the best way to search for a candidate isn't to search at all. Don't search, match with Indeed. Use Indeed for scheduling, screening, and messaging so you can connect with candidates faster. Listeners of this show will get a $75 sponsored job credit to get your jobs more visibility at Indeed.com/SBO. Terms and conditions apply.
So we all know that traders evolve and mature over time. I mean, if you go back to 2009 and look at the things I was doing in the market, I'd be arrested for stupidity. Man, it was bad. But I was able to steady the ship, get on the right track, and eventually figure it out and turn myself into the much calmer, more consistent person that you see before you today. But did you know that financial markets evolve and mature as well? And their personalities really do change over the years. I know what you're thinking, Akil, personalities. How can a market have a personality? Well, remember, what is a market? It's not just numbers and stocks and currencies floating all over the place. The market is really a representation of all of its participants, and the majority of our participants are us, meaning human beings, for you guys that are human out there. So as humans change, markets change too. And in today's Trading Coach podcast, I want to share a conversation I was having in a private Q&A session where we were talking about backtesting, we were talking about sample sizes and how much data is enough data and what to look for. And we spoke about why it's important to understand kind of what period of the market you're testing in, because that can have a certain effect on what data you collect. Let's hop in. Real quick, if you've averaged 50 trading opportunities per pair, would you still stick to trading 5 years back, or just to know the ways of each pair? I always want to get 100. So for me, 50 is just not a big enough number for me to, unless that 50 came within 10 years. But for me, 50 just isn't a big enough number for me to trust. For me, I look at 50 and I'm like, I guess this could still be random, especially over a 4-year sample size. So now if 50 came over 10 years, that's a different story. And if I've tested a million different pairs, it's not preferable, but it's better. But I would look to get as close to 100 as possible, or as close to 10 years as possible. That's just my personal preference. I like a lot of data because, again, the more data I have, the less randomness is included in it. So I would look for a bigger sample size, in my opinion. Also, I found that on the daily, I had the backtest 20 years to get over 50 trade mark. Yeah, and that's tough on the daily because, like, when you start going back 20 years, it's just a lot, if that makes sense. It's a lot. It is a different era in trading. Someone asked how relevant is 20 years to today, just because of how the nature of Forex. So to give you guys, kind of an example, right? Forex was pretty much introduced to the retail trader in the late 90s, right? And when Forex first started off, it was very similar to crypto. Now, it wasn't as crazy. You weren't seeing like 50% swings in a week or anything like that. But it was very emotional. It was a new hot thing. It was thought of by many as like the get rich quick scheme, right? The same thing as like crypto, the same thing as like binary options. And basically there were a lot of more, how do I say this politely, dumb traders trading it. And by trading, I mean attempting to recklessly gamble, and an institution is taking advantage of these dumb traders. And I don't mean dumb traders as if like they're actually dumb. I don't know what their kind of, their whatever that test is that tells you your IQ thing. But dumb is the sense like not treating it professionally, seeing it, treating it like a gambler. And then what happens is over the years, these traders get shaken out of the market, and what's left are serious traders. And it becomes more of a mature market where it doesn't move as much. The volatility isn't as high, mainly because, again, there aren't as many like dumb traders doing wild, crazy, dumb things, right? I again, look at it, I say it matures, but I look at it like, think about your childhood, where when you're a kid, you're running around crazy, making mistakes. The other day, my kid had a recital for winter, right? So one kid is playing and the other kid is in the gym, and my other kid is going crazy, right? I don't know if he was sugared up or something, but he's like jumping off of bleachers, and like doing all the wild stuff we used to do as kids, like jumping out of trees, jumping off of swings, right? You guys ever do stuff like that? You ever like get as high as you can on the swing and then like jump off and try to land on your feet and then maybe you roll and stuff like that? You ever jump off a tree? No? None of you guys were outside doing stuff? It was just me? I thought this was normal for a kid. You guys too old to remember your childhood? So anyway, I was doing all that wild stuff as a kid, right? I was jumping off of everything and landing, and I'm all bendy and flexible. Like my arm would go like on the other side of my face, and like I'd be okay. The little thing where you push it around and spin, we get really, really, really dizzy, then just jump off and land randomly somewhere, and then like get back up and keep doing it, right? And so my kid's doing this, and the near 40 me is looking at this. The near 40 me with like barely any ligaments left in his knee, a shoulder that dislocates randomly. I'm dealing with like a pinched nerve right now in my neck from I don't know what, sleeping the wrong way, right? The nearly 40-year-old me is looking at him, and I am like cringing and ready to throw up every time he lands, because I just see myself like, oh, there goes a PCL. Oh, there goes an ACL. Oh, there goes an MCL. Oh, there goes a broken arm, right? But this child has this energy, this recklessness. He doesn't care, and he can do this stuff because he's young. But we start off like that, and then as we mature, we get a little bit safer, right? We start like holding the handles when you hop down the stairs. Remember, you used to hop up the stairs doing 2 at a time. Now it's 1 at a time because the Achilles can go at any minute. You start thinking a little bit more before you make decisions. And that's the same thing that happens to the markets, right? And says, I fell over a recycling bin at Xmas and got X'd. Yeah, see, it's like that. It's the random stuff, right? You no longer get hurt doing crazy stuff. It's like, I'm going to take the trash out. Oh, there it goes. Like my wife fell out the bed the other day and almost cracked her head open on the side of the little thing we have next to the bed, the banister or the desk or whatever it is, table. So it's like, yeah, the random stuff is what takes you out. I pulled a hamstring playing Capture the Flag. What the hell was I doing? Right? But the thing is, we get older, we start making more decisions, right? We start, instead of just doing it like our kid would do, like, oh yeah, just jump off this. Now you're like, hospital bill, do I really want to drive there today? How many stitches? Right? And that's what happens to the markets. The same thing, right? They get more mature. They start to make smarter, less reactive decisions and smarter decisions, and you see them slow down. Again, look at crypto market, right? Same thing, and I called this years ago, right? Crazy, 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 and then it massively slowed down, what, about 2 years ago? It's a whole different market now. So be careful in that backtesting phase when you go back too long, because just understand that you are dealing with a completely different market with a different type of movement, right? So I would say start, man. 2000. I think once 2010, once you got out of the Great Recession, I think that's a good starting point. For me, the markets have seemed pretty consistently inconsistent since 2010, if that makes sense, meaning that it still ebbs and flows, high volatility, low volatility. But it's since 2010, I want to say it's been more of a normalized Forex market, at least. So I think that's a good enough time to go back to. Hope you enjoyed the show. I know it's a new year. You guys got lots of new goals. One challenge I have for you is to make the Trading Coach podcast a consistent part of your trading routine, right? Not only listen on a daily basis to the new episodes, but go back and listen to past episodes that you missed. There's over 1,000. I know you haven't listened to all of them. I know it. Don't lie to me. And if you did, thank you. That's awesome. Listen again. But seriously, tune in on a regular basis. I got so many awesome comments saying this has been a very helpful part of the trading journey. And I just want to spread that love with all you guys. So